This is the only day trading strategy guide you will ever need. In this video, I will be teaching you the best day trading strategy that works 90% of the time in any market. This strategy is so great that it can be easily identified, easily traded, and comes with a very low risk. So you lose very little on a bad trade and win big on your winning trades.
Wow.
And to crown it all, this strategy is very simple. I will be showing you this strategy step by step so that you can also follow up and be able to repeat this great results on your chart after watching this video. If you skip any part of this video, you will be risking it all and making this strategy a very hard one for yourself. I'm going to be brief, keeping it simple, so that even beginner traders can be able to use it and make a lot of profits from the chat. So whether you are trading crypto, forex, stocks, futures, and any other market in the financial world, this strategy is your bread and butter for all of them. But before we get into all of that, do well to like this video so that other traders can find it and also become profitable, and subscribe to our channel. If you are encountering us for the first time, now my tribe soldiers, let's get down into this business. Now, before we move into the strategy, there are 3 things that I need to clarify about a day trading strategy. This is very important before we move into the strategy, so that you can grab the full context of this. First, I would like you to put in your mind that day trading is a daily routine. When you are using a day trading strategy, you are targeting to get an entry only on the price movements that happened on that particular day. You are not analyzing to trade in a week or in a month's time. Your major focus is on that day. And that brings us to the second point, which is the time frame. Your day trading time frame. I see many traders trying to analyze the market from the monthly time frame to the weekly time frame, and then to the 1 hour time frame, and the rest that you know. But that is wrong. When you are day trading, your focus should be on the smaller time frames. Time frames such as the 15 minutes time frame and the 5 minutes time frame. You can use the 1 minute time frame if you want to scalp. Scalping is also part of day trading, as you are only trading the market for that day. Only that, you are focused on trading smaller price movements for that day. But don't get me wrong, I'm not saying that doing a top-down analysis is not good for your trading. The truth is that when you take your analysis from different time frames, you get them all mixed up. You can't really tell if what you analyzed on the daily time frame will go the same way. With the ones that you have analyzed on the 4 hours time frame, for example, candlesticks are very deceptive. The best you can do for yourself is to master one time frame. This brings your full consciousness to only what is happening on that time frame, the patterns, the structures, and the entries. You will see as the chart begins to brighten more and more to you, you will begin to find more peace with this day trading strategy, and trading becomes easier. Now, the last thing is patience. Even as it is called a day trading strategy, sometimes you might not find the setup daily. And that's when patience becomes a virtue. Trading is like the game of chess, the buyers and the sellers. Whichever side that you choose to be, you must be patient and strategic with your moves. One wrong step, and your opponent takes you out, without mercy. And with that being said, let's understand the structure of this day trading strategy. Our day trading strategy composes of 3 simple steps. First is a break of structure. A break of structure is when the market takes out the last opposing trend movement, with the intentions to change the price movement in a new direction. This way, the market can move in an opposing direction to the current trending movement. So for example, if the market is moving in an uptrend, and you see the price making a break of structure to the downside, it means that the sellers are trying to shift the price movement to move in a downtrend. And if you see a break of structure to the upside in a downtrending market, it means that the buyers are trying to shift the price movement to the upside, thereby moving it against the trend. Now, when you have identified a break of structure, the next step is to get a retest of the breaker. The breaker is the price level that was responsible for the break of structure. This is the starting point where the market gained the power to break the structure. In other words, this is the soldier that gave the order to take out the last trend move. So now, the comrades will return back to bring back the news to the commander that the operation was successful, and if there's still a lot of soldiers ready to fight, when they return, the soldier will send more, thereby moving the market more higher or lower, depending on the direction of the trend. But whether the soldiers are strong enough to move the market to the next direction, we will know in step 3. Step 3 is the entry point. This is the point that will determine if the soldiers will move the market in a higher or in a lower direction. And this our entry is called the engulfing candlestick pattern. This is one of the most powerful candlestick pattern, and it shows us the full strength of the buyers or the sellers. This tells us the strength of the soldiers that will be sent to take out higher highs or the lower lows. So when we see a bullish engulfing candle at the breaker point for a bullish break of structure, it means the soldiers have full strength to push the market to the next level. And when you see a bearish engulfing candle at the breakup point of a bearish break of structure, it means that the soldiers have the full strength to move the market down. Our goal is to follow the information that the market gives about the strength of these soldiers and take advantage of it by entering the trade. And by entering the trade, we believe in the powers of the soldiers. Now, let me show you some examples of this strategy at work on the chart. But before we get to that, let me tell you about our sponsor for today's video, Bybit Crypto Exchange. Bybit is the best leading and most secured crypto exchange in the world. This is the only crypto exchange that thinks more of the safety of their users than their trading fees. Bybit provides a big buffet of trading opportunities for their users, helping traders to make money from the market, all the way from crypto spot trading to leverage trading and even Web3 trading. And with the latest development, Bybit has brought another big opportunity for forex traders, the first of its kind, and this is called Tradingtrybe, a shortcut for traditional finance. This will enable forex traders to trade all the forex assets in the market on Bybit Exchange, including currency pairs, stocks, commodities, and indices, all on this exchange. This is a dream come true for traders, as you don't even need another broker to trade these assets on Bybit, and at the same time, enjoying little to no spreads at all as you trade. Bybit is not just a crypto exchange, it is evolving to become one of the biggest financial exchange markets in the world, and millions of traders are migrating to their exchange. And currently, they are running a $30,000 blast-off deposit reward for new users who registers with the affiliate link in the description box below and deposit and trade within 14 days of registration in order to get your rewards. Now let's get to the examples of our day trading strategy. On this example, you can see that the market was moving in a downtrend, and as you can see here, there was a break of structure to the upside, meaning that the market wants to reverse and start moving to the target direction, which is up. But in order for the market to do that, it has to come back to the point where the break of structure started to get more power to move the market to the upside. And as you can see, at that point, a bullish engulfing candle appeared, which now gives us a go-ahead to enter the market and take the trade, placing our stop loss below the bullish engulfing candle and our take profit target at the next high, or 3 times the size of your stop loss. And as you can see here, this trade was successful. Alright, this looks good. Wait till you see the next example. In this example, the market was moving up in an uptrend, and then we have a break of structure to the downside, showing us that something is happening here. The commander have sent the soldiers again, and now the soldiers will have to return to this point again, which they did. This is the point where we will decide whether to enter the trade or not. And as you can see here, a bearish engulfing candle appeared, signaling us to enter the trade, and when we see this, we can place our stop loss above the bearish engulfing candle and our take profit target at the next low, or 3 times the size of your stop loss. And as you can see here, our trade was successful. Another wonderful trade. Now, I want you to remember something. Remember that this is a day trading strategy, and it works better on the 15 minutes or the 5 minutes time frame. Tell me your thoughts in the comments section, and remember to be always patient while waiting for this strategy setup to appear on the chart. And in the next video that will appear on your screen right now, I will be teaching you on the best trendline trading strategy that works every day. See you there, Tribe Soldiers.